In this video, I'm going to go over basics about credit cards. I know you're currently a little bit familiar with it, but I want to make sure that you guys have a general and better understanding. So, the first thing you need to know is what is a credit score? So, when we're talking about a credit score, we're talking about a measure that reflects your credit history, and that can include how many accounts you've opened, um, or closed. It can also include how your payment history is, whether you've like missed a date that was a deadline for payment due or not. The amount of debt you have in comparison. So it's usually like they're looking at, have you maxed out your cards, your loans? Are you paying things off ahead of time? All those things add into your credit score. So then you have these different ranges, 300 to 850. And what you're going to see is that anything below 630 is not good. And 630 to 689 is okay, but really you want to be in the 690 plus category, especially when you're trying to get different kinds of loans. It'll help lower the interest rate or the accessibility to better loans. A credit score informs lenders and others of your credit worthiness. So, how likely you are to make your payments on time, and it tells them, is it how much of a risk you are. So, generally, if you're at a higher risk of defaulting on a loan, you're going to see that your interest rates are going to be higher in comparison to those who have much better credit scores. Why do you need credit? So, as much as no one wants to be in debt and fall into this cycle of having being trapped or not being able to pay off your credit or any kind of debt that you have to understand that it is essential to have in order to do basic adult things like rent an apartment, buy a house, lease a car, take out an auto loan, refinance your student loans, and do any other kind of refinancing. And some jobs even require a background check, or sorry, a credit card check before they even approve potentially hiring you. So it's pretty critical as an adult. You don't want to be someone who waits too long, because however how long you have a credit card or a loan account open also really helps build that history and that credit history and that credit score, especially if you're at least paying the minimum off. So, what is a credit card? This is a type of loan issued with some kind of financial institution. It doesn't have to be a bank necessarily. It could also be a financial services company. These are not the same thing. So you can see that there's a type of company like Synchrony, for example. They're not an actual bank that has like checking and savings, but rather they're a financial institution that has like a holding company. So they do other types of loans. It is a way to pay for goods and services with merchants, so companies and stores, travel, things like that, that accept cards. Not everywhere does accept cards, especially small businesses, because they are charged a certain percentage fee for using cards. So keep that in mind when you're going places, is that sometimes you'll see an additional fee tagged on because they have to pay, the merchants themselves actually have to pay a fee. It is a type of revolving credit that cardholders agree to pay back. So you are taking out a loan every time you are putting something on your credit card, which means that you are agreeing that you're going to pay it back. And if it's going to be sitting on that card for a long period, you're going to have interest that you're saying, yes, I'm agreeing to paying the interest over time until I pay everything off. You're also agreeing to potential fees, such as late fees or annual fees, depending on the card, and any kind of privacy related stuff. So you need to make sure you're reading the fine print to know what information they're sharing, but also is there potential for your interest rate to change? Does it, when your due date is? When does interest take effect on whatever balance you have? Things like that. What kind of credit cards are there? So there are store credit cards. These are ones that you usually just use for that store specifically. So, for example, my first credit card was actually from Macy's and it was a store credit card. So, the only place that I could use that is at Macy's itself and nowhere else. Anywhere credit cards, you're thinking more about a general one. So, it's accepted at almost merchants worldwide, but you got to make sure that before you travel, especially outside the United States, that it actually is accepted outside. There are ones like American Express that actually aren't often accepted outside of the US. So these type of cards can be from banks, it could be from other financial institutions, it could be from companies such as like Southwest Airlines, Old Navy, Amazon, Sephora, um, pick one. I mean, there's really tons of different places that issue credit cards. And then there's charge cards, and charge cards are a little different because they are requiring full payment every month. And generally, they charge an annual fee. Most people tend to not get charge cards. Lastly, when you're looking at credit cards, you're thinking about what types of rewards there are. So it's important to think about what you like and what you tend to buy. So, for example, for me, I buy a lot on Amazon. So it makes sense for me to have a credit card where I'm earning reward points toward Amazon and I can use that to save some money. And sometimes they also give a certain percent discount when you have those type of cards. But examples also include travel points, where you accrue points and it ends up being a financial sum that you can use toward like hotels, airlines, cruise lines, and etc. Things like that. There's also cashback options where you actually get cash back. Sometimes it's in the form of a type of debit card that they issue. Store points. So, for example, if you have like an Old Navy credit card, you can earn points toward the store and it ends up giving you almost like a gift card specifically toward that store, but nothing outside of it. And there's also things like miles points. So for traveling, this is like an airline type thing where you accrue certain number of miles. So every time you fly, you can deduct whatever those miles are and you can get some free flights in if you use it enough. The biggest thing to note though with all of these is that when anytime you hear a credit card talking about 0% APR, it's not a permanent 0%. What this means is that it's usually for a very limited time and it will give you exactly what amount of time, usually between 3 and 6 months. But once that period ends, it's no longer zero APR. It changes to whatever percent that you are technically still agreeing to outside of that. So you'll notice that there will be a huge jump in paying it off if you're not paying all of it off right away. So make sure you keep in mind these different things while you're going through this